Good morning, good afternoon, good evening, whenever you are watching this week's video. We are back. And we are now into the second week of August 2026. Now, last week, I told you all I will be focusing on for the rest of the year things that are impacted by the One Big Beautiful Bill. And last week, there was a fact sheet that came out regarding qualified overtime. Reason why is because we weren't 100% sure of how stuff was going to work and how it was not going to work for the 4 or 5 things that showed up on the 2025 return. Overtime, a deduction for overtime, a deduction for tips, the interest on the car, senior credit, which I liked it for my seniors that was able to get the credit. I'm happy for y'all. I really feel like y'all needed that. Which was me, but hey, I get it. And there's one more credit that's not rolling around in my head. But, this kind of worked very similarly to some rules and regulations we thought was happening. And normally I don't have the microphone in the screen. So if the microphone's in the screen, y'all bear with me. We making some changes over here in the office. And I want to make sure that y'all hear me. Because it looks weird that it's in the screen, but y'all know I was using the mic. Needless to say, I want you all to go through this with me. It's an update on the frequently asked questions. High level. We're going to go through it. It came out August the 6th. So this is almost hot off the press. Not exactly like the next day, but it is very, very relevant to what's going on. The reason why is because all of us that are getting W-2s. Now, I'm gonna get up close. I'm gonna get up close in your face. The reason why I'm gonna get up close in your face is because I feel like you need this. You need to know this. You need to remember this. Why? Because a lot of us just be looking at our checking account. Why? Because it's conveniently on this right here. It's on the phone. You can open the app. Boom, I got some money. Let me go get the snack. Okay? Maybe I'm just talking about me. But there's pertinent information on your pay stub. Let me back out. Let me get out your face a little bit. Just a tad. The pay stub, and I've mentioned this before, the pay stub actually has pertinent information on it. And if you've ever done a tax planning session with me, this is the reason why I asked for your latest pay stub, because not only does it give me the information that is happening for the most recent pay period, I want to know year to date. So I'm going to the year to date column and I'm breaking that thing down. Okay, what's going on here? Do I see overtime hours? How much tax have you paid so far at the federal level? What is your benefits? Can I see how much you put in the retirement? Year to date. That year to date column makes a difference. And as we go through this, for those of you who would qualify for some overtime pay, I'm going to need y'all to go pull them pay stubs and make sure that stuff is correct. It should coincide with the timesheet that you submit. Now, y'all probably like, what? Even in my own business, I have a timesheet where I actually check in and check out. And the days that I do not fill in and check out, that's when I'm not getting paid that day. Lay side, because my boss, she don't go for that. She be like, did you fill out your timesheet? If you didn't fill out your timesheet, then you just not getting the money, right? So if this is what you're doing and you work for somebody else and your timesheet is correct and you have overtime pay, it should be reflected on your timesheet, which then gets reflected on your pay stub, because we're going to find out that when we get these W-2s in the next 6 months, and yes, I do say 6 months because we are in August, and those W-2s will hit our mailboxes and our accounts either December 31st or by January 31st, then we need to know what's going on. And we need to make sure that stuff is accounted correctly, because it truly does account into dollars. That will reduce my queen and my king, helping us to reduce what you owe them people, and I can compare it to what you paid them people. All right, so let's get into it. Y'all can be like, what? Patrice, let's get into it. Tell me what I need to know. What's going on here? All right, what you need to know. No tax on overtime, IRS qualified overtime compensation. We just had frequently asked questions, got superseded by something that came out in January. It just got updated in August. So this is the August version. All right, so what's new in this update? The fact sheet includes significant updates and additions to how we're handling overtime compensation. What is getting clarified? Limits, timing, and exactly what type of overtime is going to qualify. It's explained in better detail. So they saw we was making some mistakes. They could use the 2025 return and say, hey, they was getting this wrong. Let's go clarify. Right? Reporting requirements. On that W-2, box 12, there will be an amount, and it should be an amount if you qualify and got some overtime so that it can actually be in there. It's going to show up. Form 1099 miscellaneous and Form 1099 NEC. How stuff is going to be reported. Withholding procedures. This is more so for the employers and the payroll companies, right? New information on federal tax withholding and what's going to go on the W-4. And then for you all, the federal employees, shout out to, as a federal employee alumni, shout out to my feds, okay? For you all, more detailed guidance on issues specific to what's going on with you all as feds is covered by OPM FLSA regulations. All right? And they didn't do this, Treasury didn't do this on a whim by themselves in a vacuum. They went to OPM and the Department of Labor to go and get stuff handled the right way. All right? Now, let's go over this. What's the deduction? An income tax deduction for overtime is only required, right? We're only talking about FLSA monies. So it's not everything. So when we were doing this last year, I'm looking at your stuff and you might say, I got overtime for this, but not this. I was looking for premium overtime. So it's a specific overtime that qualifies for this deduction. All right. And it had the FLSA and how many hours you had to have work. It was all these rules and it halftime and time and a half. And it's a lot of rules to it. Okay. Now, is available whether the individual itemizes or takes the standard deduction, meaning that this deduction is happening on the front of the return. It's going to happen on a Schedule 1A, not a Schedule A, not a Schedule 1, Schedule 1A. This is where this is taking place, okay? And so it's a dollar for dollar deduction above the line before we get to the queen. She important. This make a difference. No, I stand corrected. 1A happens after the queen. After the queen. And my eyes are scrunched because in my head I'm looking at a tax return and I'm like, wait a minute. Page 1, that deduction didn't happen on page 1. It happened on page 2 after the queen. So it's an after queen deduction. I stand corrected. Voluntary overtime not required by FLSA does not qualify. So that don't mean be raising your hand talking about hey, I'm going to do overtime because I want this deduction. Now, what's the limits? Up to $12,000 per individual return, $25,000 for joint filers, each individual, right? $12,500. But my queen's cousin, modified adjusted gross income, come in and you got to make sure you know what that ends up being. If you exceed $150,000, we're going to start phasing out. Y'all know $150,000 is a sweet spot for everything. And if you're a joint filer, $300,000 is the sweet spot. You will start to phase out. Schedule 1A is where this stuff is going to be at, right? Like I said, when is it paid? The same principles govern when a payment is treated as wages for income tax withholding purposes apply to determine when qualified overtime compensation is paid. Okay? The deduction does not exclude overtime from gross income. So all them taxes and everything that got to come out of it, that money going to still come out. All your payroll taxes going to come out of it. Your portion and your employer's portion going to come out of it. That has nothing to do with it. We're trying to figure out how much of it and how many hours and what the amount is for your deduction that's going to happen on where? Schedule 1A. All right. Now, who qualifies? Because this is important. An employee must be covered by the FLSA and not exempt from its overtime requirement. Now, I know some people are like, what? Who is this? We're going to talk about who this is. But there's sometimes, and this is from the Department of Labor stuff, right? They'll be like, well, this employee is exempt from LMNOP. And sometimes you don't know that unless you go look at your record. So go look at your information. Go see if you would exempt employee status and what that is and what you don't have. You got to go look at your You gotta go look at your HR record. And if you don't know, go ask HR to show you where it is. A lot of us have I'm gonna make up a word. It's not right. Self-serve. Boom! I'm right. Self-serve HR capabilities where we can look at our payroll, we look what's in our payroll record and if for those feds, OPM record. We have a self-serve portal where we can go look at this information. Check that stuff out. Figure out what it say. Make sure you know if it applied to you. And if you don't know, go ask the HR people. That's what they're there for. That's their specialty. Not me. Don't ask me. I'm not HR. I'm the accountant and the tax lady. Okay? Not the HR lady. All right. So, I'm going to go over to common FLSA overtime exemptions. Who are these people that are exempt? Executives, administrative, and professional employees, outside sales employees, certain computer-related occupations, commission employees, like if you're doing retail at the mall and stuff like that, railroad, air carrier, taxi, and motor carrier employees, seasonal amusement or recreational establishment employees, and certain agricultural employees. So these people are exempt. You can't be, you can't be exempt from these overtime. So a lot of your senior executives would not fall into this category, right? But you may fall into this category if you are not a senior executive. But you got to go look at your stuff. Overtime paid under a collective bargaining agreement or state law, but not required by the FLSA does not qualify. So these people that's in these unions, you need to go see what your stuff's saying. Employee owners, someone like myself, right, with at least a bona fide 20% equity interest who actively manage the business are generally considered executives and are FLSA overtime ineligible. What does that mean? Even though I told y'all I fill out my timesheet and I do all the things, in my business, I am exempt because I fall into that top category. Meaning, even if I do overtime and I work over the 40-hour limit and it goes into, I do not qualify. Why? Because I fall into that second rule, being an employee owner. Make sense? If it don't make sense, y'all know to be like, Patrice. So my people that own businesses, do it make sense? Those who work with me, right? Topic C and D, reporting and withholding. So where are we going to report this at? It's going to be reported starting in 2026, come either December, because some people get theirs in December, at least by January, right? You're going to have this, and you need to be looking at box 12. The code is TT. For everybody who's preparing taxes, or you know you got some overtime and you trying to make sure it's on there, box 12 of that W-2 code TT, that means overtime for us. And we know that means what? We need to get ready to put something on the schedule 1A. That's starting in 2026. Employers must separately report qualified overtime compensation on Form W-2. The full amount is reported, even if it exceeds the deductible limit. And what did we know the deductible limit was? $12,500. So even if it exceeds it, put that joint down there, right? Because we don't know, as the employer, we don't know your filing status. Well, we do because of the W-4. But we don't know if that's really what you're going to do when you go do your tax return, okay? Put down what the person earned. Put it all down there. Form 1099 miscellaneous and 1099 NEC. Used only when a worker happens to be an FLSA employee, but they're being treated as an independent contractor for Internal Revenue Code purposes. This is very, very rare. But obviously, there's some people that this falls into. And so if that's the case, work with HR, work with your payroll provider if you are an employer where you have people who fall into this category to make sure that information is properly documented on their 1099 NECs. And if you're not sure of what that is, get on the phone with the payroll people. Not me. I am the accountant. I don't do the timesheets and the records and stuff like that. Now, if we got to do a meeting and figure it out, that's a different story. But I'm telling you, because it's specifically for some of my clients, hey, Patrice, go talk to your payroll people because they know all the information for your employees better than I do. We just want to make sure it shows up where it's supposed to show up. Withholding rules. Employers may not reduce withholding for the qualified overtime deduction unless the employee furnishes an updated W-4 telling them to do so, right? The 26 W-4 and the tax withholding estimator must have been updated for this purpose. So you can't say, hey, instead, I'm not going to withhold as much money. I'm going to do this, and we're going to put that $12,500. They're not going to get that in their pocket because they're going to get a deduction. You can't be out there doing stuff like that. That is not appropriate. Okay? Topic E, information for employers. All right? For most FLSA overtime eligible employees, qualified overtime compensation per work week is calculated as following. This is the calculation for all my people in the back who are trying to figure out what this is. Go take this and go talk to the payroll company, not me. I'm not the payroll company. FLSA hours over 40. So how many did they work in excess of 40 hours for the work week? Because the basic work week here in the U.S. is 40 hours. Times a half their regular rate. Multiply by 1/2 time the employee's FLSA rate. That equals this half premium is the qualified overtime compensation for the deduction. That's our qualified overtime pay. Not all of it, only the portion that applies based off of the FLSA rules. A work week is a fixed recurring 168-hour period, 7 consecutive days, 24 hours. Hours cannot be averaged across multiple work weeks. If an employer pays more than the FLSA required, if they pay double time, only the minimum amount is required and counts as qualified overtime compensation. If there is a mistake and it was forgotten and you need to let your employer know, hey, according to this, you did not record in box 12 my hours that fall for overtime, tell them so they can do a W-2C and get it turned in time so that we make sure that we are recording the right information. What am I telling y'all? In other words, I know I went back. What am I telling y'all? Because I'm going to end up doing a part one. I went back too far. A part one and a part two on this. What am I telling you? What I'm telling you is look at your pay stub. Know what your payroll information says. Know what your position says to determine whether or not you are exempt or non-exempt when it comes to overtime. If you are doing overtime and you qualify as a non-exempt person, then is your overtime being correctly recorded, and do you see it? And make sure when you get to that last pay stub for the year that turns around and is properly reflected on that W-2. That's what I'm saying. Look at your stuff. We have to not just rely or ensure that everything is done correctly. Why? Because I can tell you in 2025, there was a federal agency that told its employees like really close to April 15th, we gonna have to get y'all all revised W-2s. Y'all need to file extensions. The reason why is because your overtime amounts were wrong. You got it, but we need to give y'all the right information because it was calculated incorrectly based on the rules and regulations that exist. And so therefore we are doing W-2Cs. Hold off. Do not submit what you have. And if you have already submitted those returns, y'all gonna have to amend them because your calculation for your overtime deduction is going to be inaccurate. I know this for a fact. I had a couple of clients that this applied to, and we had to wait a couple of days. We did an extension, because they got told at the last minute that something happened in the payroll system. It was not calculated correctly. Thank God now that the payroll people caught it and let everybody know. But you can be proactive as well, right? Because everybody might not know. And there's been a press in July for people that are doing payroll. And I know it because I do payroll, right? I'm an employer that has payroll. And so I'm getting the notifications. Hey, make sure this is done right. Make sure stuff gets corrected. Make sure you have your categories correct because Your payroll company, when they process W-2s, got to do the following. Hey, this is here. This is time. This is real. This got to go on a W-2. Like, we've been getting those announcements. And so therefore, as an employer, I am telling you that we have to pay attention to this information, because there's certain stuff as employees y'all have to be aware of. And if it goes to, I might just jump to that real quick. And then let's jump to that slide. Information for employees. And then we'll end on this note, and then we'll talk about some other stuff next week. I'm to mouse. Come on, act right. Employees, check your W-2. But before we even get to your W-2, what you gonna check? Y'all got it right. Y'all gonna check them pay stubs. Qualified overtime compensation must appear in box 12, code TT, when that happens. Without this, no deduction is allowed after 2025. So when we get into January, if it ain't there, then it don't exist. Don't be mad at me. Go talk to your employer. Complete Schedule 1A. This automatically is going to happen when we fill out the software for tax preparation. If we were doing it by hand, I would know, hey, I got to go to Schedule 1A with this information so that it can show up on the front of the tax return. All right, so Schedule 1A has to be complete. If you're doing it yourself and you're using software, make sure Schedule 1A gets completed. There will be limitations. You're going to put the full amount in. You are looking at code, box 12, code TT. If there's an error, you need to go ask for a W-2C. This is why I need you to catch it before we ever get this W-2. Because what you going to compare it to? How you going to know it's an error? You got to look at your pay stub, right? If your employer overstated or understated the amount, request a corrected W-2C. Do not file that tax return until that W-2C is done. You may actually deduct the actual qualified overtime compensation, not an overstated figure. And filing status and Social Security requirements. Married employees must file jointly to claim the deduction. A valid Social Security number is required. Okay? I'm going to end it on that note. I don't think it's too much more I want to talk to y'all about when it requires this topic. Yes, I do have some additional information. We'll make sure you get a link to that frequently asked question document that this was prepared from. This presentation was prepared from. But, I do want to say, hey, my federal employees, you're like, Patrice, but what do I go look? I'm a federal employee. Not that y'all sound like that. But if you do, right? Check your SF-50. Exempt, that means you're not eligible. Don't even worry about, hey, I'm not getting no overtime. Non-exempt, boom. Check your payroll records. That's why I say, go and ask the people, not me. What form? SF-50. Go to your portals. Do the things. That's why they gave us all these portals. Remember your passwords, y'all. Pass keys and passcodes and all the things they're giving us. All the multi-factor. That's a whole nother topic for another day. I look so irritated and constipated. Needless to say, I want you to do your own due diligence. Because it may not just be this overtime that's wrong. It could be some other benefit that's not calculated correctly. And you want to catch it as quickly as possible. And maybe you don't do it. Maybe you don't look at that pay stub every week. Maybe you're still looking at the bank account. Maybe you only look at the pay stub monthly. Maybe you look at the pay stub quarterly. Maybe you look at the pay stub when you come to me for a tax planning meeting and we discuss it. But I want you to get into the habit of not just taking it for what it is. Look at that pay stub. Look at the pay stub. So that way, y'all not clutching your pearls when we go to file the tax return. You like, I didn't withhold enough money? Nah, because I'm going off of what you gave me on the W-2. The W-2 is driving that information. That's the starting point of this tax return. And so you should not be shocked to know, did you withhold enough tax? Do I got overtime? Did they pay me in tips for that? If I fall into a situation like that, read and understand that this information, that W-2, is the first thing that's telling it what to do is the W-4. Then it's being reported to off from your timesheet, and you get a pay stub that you're supposed to reconcile against to make sure you're in match. Yes, all my leave is on here. No, you didn't get me for extra stuff. And then that then turns into what gets all rolled up on a W-2 that I then report on your tax return because of what? Your employer already sent that W-2 to the IRS. So the IRS already know your business. We just saying, yeah, this is it, and here's the expenses you don't know nothing about. All right? If this made sense, if this clarified the things that you need to be paying attention to, and then you know that you don't do a great job of looking at your pay stub, and you need to do a better job of it, here's that thing that tells you, yup, I was just thinking about this week. I figured I need to look at this pay stub and get ahead of some stuff. I'm that confirmation for you. So, hopefully this helped. Hopefully this gave you some insight. Next week, we're going to be talking about some other stuff. What's going to happen with charitable contributions? How much of gambling losses are we going to be able to take? What's going on with, I don't say retirement accounts, but HSAs and medical stuff? What things go all the way live in 2026 that we got to do a better job of being aware of as individual taxpayers? I'm going to bring it to you. All right? Until next week, y'all have a wonderful week, and I'll holler at you. Peace.